I'm covering 5 stocks to buy right now for February of 2025. And the first stock that I'm going to cover is up over 125% in the last 12 months. And I think this stock is set to double again. I respect your time, so here's the 5 stocks that I'm going to be covering in this video on screen right now. I invest a lot of my money into high growth tech companies to achieve over 50% results per year, year after year. The first stock I'm going to cover in this video is Sofi, and I'm going to tell you why it's on my list and why this is a really special opportunity. Now, first of all, Sofi has earnings in less than 5 trading days on the market open, actually before the market open on the 27th. Now, Sofi in general is reinventing what it means to be a bank. That's why the company is taking off. Sofi benefits from a banking license combining fintech growth potential with traditional bank credentials and credibility. Positioned to become a more fintech-oriented company leading to a higher valuation and revenue growth, they're treating their customers exceptionally well. Their business is growing, they have reduced costs, they have higher profit margins, and I believe Sofi is going to continue to grow. You see, if we take a look at Sofi's chart actually, as you can see right here, Sofi has reached a new 52-week high. Now, a lot of folks that subscribe to my channel had huge and massive panic when Sofi pulled back. However, I've been holding Sofi and I haven't done anything at all, and we just reached a new 52-week high. So over the past 1 year, Sofi has had tremendous growth, and I expect this to continue. I can actually see Sofi as easily a $25 or $30 per share stock. But the disruptive innovation is not the only reason that I'm investing in Sofi right now. See, there's actually more reasons why I like Sofi as a company, and I think they're going to continue to increase in value, and now is a very special time for February 2025 to invest in it. The main reason is that Sofi has earnings on the 27th before market open, so you must take action before Monday if you want the upside. Now, of course, the upside isn't guaranteed. You never know what's going to happen with earnings, but I'm very bullish and I'll tell you why. So Sofi's Q4 earnings report and 2025 guidance is less than 5 trading days away, and it's anticipated to be a very good earnings quarter. Management is expected to exceed Wall Street's low estimates for revenue and earnings per share, which could significantly boost the stock price. I believe they're going to come out with really good earnings, and that's going to be a surprise and shock to the market. And when that surprise and shock comes to the market, a lot of investors are going to be piling into the stock. And right now, since Sofi is at a 52-week high and the momentum is very high, I can see the stock really exploding from 20 to 22 to maybe even $25 per share. $25 per share would be too big of an explosion. That would be unlikely, but over $20 per share, if there's a good earnings quarter, would be extremely easy. Now, you guys know that I cover a Goldman Sachs report last week, and I used to work there, obviously, blah, blah, blah. But there is a research report that says that buying call options before earnings is a very good strategy, especially on tech stocks. So I'm going to be recommending you guys to buy an $18 call option. Now, again, look, I'm not a financial advisor, and be extremely cautious here because playing earnings is close to a 50-50 coin flip, okay? When you're buying options, they're more dangerous than selling options, which is what I primarily focus on with my one-on-one clients. I'm focused on generating safe, passive, consistent income. But I am really interested in Sofi, and I'm going to be looking at this stock more closely this week. And I think that we're going to see a breakthrough from the current resistance level of about $18.50 per share. You can actually argue that Sofi doesn't even have a resistance level right now because they're hitting a 52-week high. So in fact, I would say that $20 per share is very reasonable in the next, 7 days or so. So Sofi is projected to achieve full year profitability in 2025. And this is a very pivotal moment, guys. If you've taken a look or you've studied history, when Tesla, when Amazon, when these companies became profitable, that was a very big catalyst for more investors to jump into the stock and invest in it. This is a very similar situation to Tesla back in 2020. So there's a historical examples like Tesla, like Amazon, and Robinhood as well. Once they show profitability and the profitability flips, leading to exponential rise in the stock. Guys, it's not really rocket science because when a company becomes profitable, that's the whole point of a company. That's the whole point of business. That's pretty much the whole point of capitalism in America is to make money and have profits. So I'm very excited to see what the Sofi earnings will be. And I think this is a very pivotal moment. Now, there's one more thing that I want to mention about Sofi before I move on to my second stock, Google. Now, look, for Sofi, the incentive plan is very good for the CEO. So the CEO, Anthony Noto, he has a $290 million bonus. It is freaking insane. The bonus is $290 million if the stock reaches $45 per share in stock price before mid 2026. This is very motivating and a very aggressive bonus for execution on the growth and profitability side of SoFi. So when a CEO has 200 million, 290, excuse me, basically $300 million, you know how motivating that is? I think that the CEO is going to execute with everything he's got. He's going to give it everything he's got, and I do think that SoFi can reach $30 per share. Now, I don't know about 45. That's a big one, but I'm still going to be buying this stock bicep over tricep, as you guys know, because I'm a big believer in the company and the business. And you guys know I put my money where my mouth is, and I put over $1 million into Tesla. I'm about to go just as heavy on SoFi, but I'm going to do that at the end of the week. So make sure that you're subscribed because I don't know the exact call option I'm buying just yet. This is just research I've been doing in the last couple of days that made me even more bullish than I already was. Now let's go into the second stock, which is going to be Google. Former House Speaker Nancy Pelosi engaged in notable trading activity involving Alphabet Inc. More on that in a minute. I'll talk about Nancy Pelosi and why her trades are so innovative, because I do pay attention to what Congress is buying. Congress has insider information. Their salaries are not that high, but I guess most of their compensation comes from the stock market. Yep, the Congress people know more than what we know. So taking a look at them gives us and me a lot of insights, right? So I want to break down the high-level Google insights before I give you the hype of what Nancy Pelosi did. Okay, I want to bring you down to earth and actually tell you the facts. So despite the ongoing antitrust lawsuits, Google remains undervalued compared to Microsoft with a lower PE ratio and high profitability. So I actually want to show you the fundamentals, and I want to take a little bit of a 1-minute show for you and look at the statistics of Alphabet, because it's all fun and games to talk about why a company is going to go up, but I actually want to, bring this to real numbers and real dollars, okay? The market cap is currently sitting at 2.43 trillion, all right? This company is heading towards $3 trillion valuation. Now, the trailing PE is 26, which is very reasonable. If we compare this to Microsoft, Microsoft is a lot higher. The forward P ratio is 22, okay? Realize that this is very low. This is an extremely fair valuation, and in many ways, because of the antitrust lawsuit, I think Google is very undervalued because the market is calculating more risk than there actually is. I'm actually going to show you a Google call option that I purchased that has had a very high return. That's all because of the valuation. The valuation to me is very cheap. The price to sales ratio here is 7. Price to book is 7.78. I mean, this company is very cheap for having revenue of, $339 billion, revenue per share of $27 per share, with very good quarterly growth. I'm going to tell you a little bit more about the business, how it's doing, but I wanted to go over the financial ratios because these financial ratios do mean a lot. The cash per share on the balance sheet is insanely high. So Google is stockpiling a lot of cash. You can make an argument that Google doesn't even know what to invest the cash into, but I do think that they will find, areas of the business that are high return, such as cloud, such as AI. These are very notable and strong portions of Google's revenue. So, I'm very excited for what's to come for Google. Now, we're seeing that pre-market here. We finally hit $200 per share. The only Google position I have in this portfolio, I have 2 portfolios. One portfolio for, the public here on YouTube, my Discord community, and then I do a little bit more aggressive stuff to scale portfolios, from 6 figures to 7 figures and beyond with a lot of my private clients in my other portfolio, where I do have a lot of Google, a 7-figure amount in Google. But in this public portfolio where, I'm just trying to scale as well, maybe some smaller money, Google 155 call option, I'm up $25,800. And this has been a 98% return. So, I've done extremely well on picking up Google back in September. And, it just shows you that you don't have to get sexy or invest in the hype companies to make really solid income and solid money off of, call options. This can be before earnings, like I said, for SoFi, or it can just generally be a leap option like I'm doing for Google. The price to earnings on Google is 10 less than Microsoft. The price to earnings growth ratio, which is a ratio that calculates price to earnings and then also factors in, future growth, expected growth from analysts, and that is at 1.6 compared to Microsoft's 2.8. So on all fronts, Google is cheaper, but I wouldn't say it's worse at all than Microsoft. So I'm going kind of for an arbitrage play in a sense that I'm looking at what valuation is cheapest amongst the Mag 7, and Google is a huge value. Now, going back to the business model of Google, Google's cloud market share has doubled in 5 years and continues to grow at 35% annually, highlighting its diversification and growth potential. Now, I'm also bullish on YouTube. You're watching this on YouTube, okay? And YouTube generates significant revenue from ads, accounting for roughly 10% of Google's total revenue based on Alphabet's quarterly and annual financial results. So, what I like about YouTube and how this is going to contribute to Google stock and why I'm recommending to buy it in February, especially as we hit $200 per share, I expect continued growth because YouTube is available in over 100 countries and supports 80 languages, offering unparalleled access to diverse audiences. You'll also see some of the most talented creators on the YouTube platform because long-form content I'm personally very bullish on. Users spend over 1 billion hours daily watching videos on the platform, providing advertisers with a massive engaged audience. Okay, I'm bullish on long-form content like podcasts, and YouTube is doing a lot to gain creators on the platform. You see many creators prioritize YouTube as their content engine. And I know a lot about this because obviously I'm on YouTube. We have a decent amount of subscribers. I can always have more of you guys subscribe, but I love the platform and I love what YouTube is doing to create free education, free entertainment, and lots more. And creators love the platform. So also just looking at what I said before, Nancy Pelosi, on January 14, 2025, Pelosi purchased 50 call options for Alphabet with a strike price of 150, and these are set to expire in January 2026. So I wonder what you guys should do. What do you think you should do based on Nancy Pelosi? All right. So I have some long call options as you guys saw on Google, but based on Nancy Pelosi, there doesn't have to be much more words said for what I am doing. However, I will also say that Google is fantastic for leap options, for poor man's covered call, for general stock investing. I'm using my whole entire kit of option tools to basically, invest in Google. That includes covered calls and selling puts as well. Now, let's move on to the third stock that I want to cover, which is going to be Nvidia. Now, let me start off with a fact on Nvidia. Nvidia controls a staggering 98% of the AI data center market, making it an undisputable leader in AI hardware. I want to show you what the Nvidia chart looks like because, again, we've had some weakness in Nvidia and I ended up losing subscribers and, folks telling me that I'm saying it's a once in a lifetime opportunity a lot. It's because I truly believe it is. And Nvidia has already showed us that the weakness wasn't going to last very long. Okay. So instead of panicking, I'm a long-term investor. I believe in dollar cost averaging, and I use options to beat the stock market. I've been doing that year after year, and that's how I scaled my wealth from 100K to 700, 700K to 1.5, and then 1.5. You guys see my portfolio. Well, let's actually take a look at the portfolio where it's at. It's at over, $4.1 million. All right. So I've had very good performance, a little bit of a slowdown recently, but again, I got very rich off of trading options and properly investing in them, hedging, and it didn't require market timing and it didn't require guesswork. It just required being in the right assets and using the right strategies. And for me, Nvidia is a no-brainer. I mean, Nvidia is at 140 pre-market. We see a increase in the stock already. And in my opinion, with the explosion of generative AI, Nvidia is no longer just a chip company. It's becoming the backbone of the next technological era. Okay, we've seen analysts come on multiple news outlets and say how we're in an AI revolution. Absolutely. AI is exponentially growing. So Nvidia is the backbone of that. Nvidia isn't just dominating the AI race, it's shaping the very future of how humanity interacts with technology. And investors, you guys got to take notice that at these levels, Nvidia is a buy because on a long-term basis, I believe this is a $200 stock, 250, and we're going to continue to see momentum as Nvidia fuels the AI revolution. It's as simple as that. I think this is an undervalued opportunity despite its rapid growth. Nvidia still has untapped potential in AI. Okay, some of the examples are autonomous vehicles, the metaverse development, and they're creating multiple future revenue streams by being involved in all of these pockets of the economy. So I will point out that you guys know I like to give you the objective facts. I'm not just a bull who doesn't see the risks and the warning signs. So I will mention one risk just to stay objective here. High valuations could lead to short-term volatility. The valuations aren't high for the long-term potential, but in the short term, there's going to be volatility. So if we pull back again, don't make the mistake, stay subscribed, listen to my updates, because it's going to go like this in cycles, okay? As we have cycles, it doesn't really matter. The only thing that matters is our end point. Where is Nvidia going to end, and how do we make money in the process? How do we hedge? How do we create income? It doesn't really matter. As long as your wealth increases and your cash flow stays high, you, my friend, can be retired. And if the stock market pulls back, it's the same thing as the housing market pulling back. Just most people don't complain when their house falls in price, but when the stock market falls in price, we get a rush of emotions. I'm telling you, don't worry about that. Right? The fact is, Nvidia's stock price has surged over 2,000% in the last 5 years, fueled by its dominance in GPUs and AI technology. I expect something similar to continue. Now, obviously, 2,000% again isn't going to happen because Nvidia was massively undervalued before. Now it's slightly undervalued. It's approaching fair valuation, in my opinion. And I think the launch of the MI300X chips, they're targeting data centers, and this could be a game changer that positions Nvidia to expand even further into AI infrastructure market. Nvidia isn't just riding the AI wave, they're the tidal force creating it. Missing out on the stock could be a really big regret, so I think that's pretty much an upset for Nvidia. Let's move on to the fourth stock that I want to cover. This is going to be Palantir. Okay, so Palantir I've covered a lot on this channel, but I wanted to go over some of the valuations of Palantir just so you understand where I'm at with Palantir. Palantir is the only stock that I've been covering that hasn't fully recovered just yet. Of course, it's only been a couple of weeks, so I don't really expect, a normal cycle of a little bit of a pullback to recover after just a few days. Okay, but you can already see that investors understand that Palantir under $70 per share is an extremely cheap valuation. So we've already seen that there's a lot of recovery on Palantir. So for those of you who listened to my continual updates that I do, on a very regular basis, have already profited from Palantir's recovery. Palantir, isn't just another software company, just like Nvidia. The reason why it has such a huge valuation, and it is going to be a $1 trillion company at some point, is because this company's secret weapon is taking a lot of money from the government. All right, the government has a lot of money, they spend a lot of money, and the secret weapon that Palantir has is that they're working with government agencies, right? They're having huge contracts that are renewed on a continual basis that are $100 million, $200 million, and Palantir is undervalued because they also have an opportunity to make money off of the commercial sector, and the commercial sector is growing at 30% annually. And as they integrate AI solutions, the upside potential for the stock is massive. They're going to make money off of the government, they're going to make money off of the commercial sector, they're going to make money, unfortunately, off of war. I don't support war, but war is going to continue because humans will be humans, greed will continue, and making money with war is a fact in our lives. So Palantir is making a lot of money from that, and this is not just a tech play; it's a bet on the company powering the future of decision making, the future of war, cyber warfare. All of these things Palantir is going to profit off of. And the fact is that Palantir has a lot to their business, not just war. Their AI platform is super powerful. AIP, which is one of their products, integrates large language models, positioning the company as a leader in enterprise-grade artificial intelligence applications. You guys pretty much notice the theme right now that I believe AI is going to be the strongest investment vehicle that you can possibly make. If I had skills in AI, I would work in AI. I don't have the skills in AI. I have investing skills and coaching skills. But I love AI, and I'm very excited about it. And in my opinion, unlike other AI companies, Palantir combines cutting-edge innovation with a proven history of securing huge contracts. Look at the results. Follow the money. It's not that hard. If you follow the money, you'll see that Palantir has a rare and winning combination of tech and sales. Their sales skills are really good. They are making tons of money on their sales, okay? And that's really important. A good product alone won't make a company rich. It's all about sales, marketing, and product and fulfillment. All right, let's talk about the fifth stock, okay? So Trump in office, all right? Trump is in office. I watched the inauguration. In Trump, we Musk. In Trump, we Musk. So Elon Musk and Donald Trump, these friends are going to be making money together. That's the whole point. You saw the Trump meme coin. I was shocked. I was kind of shocked, but he made tons of money off of it. But I'm shocked because it kind of seems like a business, eh? Politics is a business, eh? Anyways, I think Donald Trump and Elon Musk are going to make money hand over fist, bicep over tricep, okay? Because it's all about the money. It's all about the money for them. So you might as well join them and make some money with them because they're going to be making money whether you wake up in the morning or not, whether I wake up in the morning or not, they're going to be making a lot of money. So you might as well join the situationship that they got going on, the friendship, the situationship, whatever you call it, right? Sorry if I scared you. I just want to make it funny and obvious that you got to load up. And also, January 29th, mark your calendars, as I believe Tesla is a good buy before earnings. Before earnings, okay? You might remember when I purchased Tesla and I summarized it when I put $1 million into it. Here's a quick clip, 30 seconds, when I invested in Tesla and my main reason for it. As you can see, I just invested $1 million into Tesla stock and I bought 3,000 shares of this stock. So why did I do this? And why do I think Tesla is one of the best opportunities right now to make a ton of money? I just put $1 million more into Tesla, and I think it's undervalued for 3 main reasons that I will cover in this video as quickly as possible. I respect your time, so here's the main explanation, okay? Dan Ives mentioned that regulations are going to get a lot better for Tesla now that Elon Musk is in the White House and he is friends with Donald Trump. So that was 30 seconds. I don't want to waste your time. I respect your time. That's a long video, so I don't want to spend more of your time than I have to, but let me give you the other 2 reasons that I believe Tesla's a buy right now quickly, all right, and we'll wrap up this video. Expansion into autonomous vehicles. Tesla's advancement in self-driving technology, particularly the anticipated launch of the Cybercab robotaxi service, are expected to revolutionize urban transportation and create substantial new revenue streams. They're going to make revenue because economically, it's going to be the best option that the consumer can take in terms of taxis and transportation. Simple, straight, very logical, okay? Next thing is innovations in artificial intelligence and robotics. The development of AI-driven products such as the Optimus humanoid robot positions Tesla at the forefront of integrating AI into consumer products, potentially transforming various industries and enhancing operational efficiencies. So those are the 3 reasons why you should buy Tesla. Buy before earnings for upside, and I will be covering this in my next video. Subscribe, and I'll catch you in the next one.